All right, hello and welcome everybody to today's webinar. Today we're going to be talking about Bitcoin and introduction to trading Bitcoin. This webinar is brought to you by OctaFX, the award-winning Forex broker offering some of the lowest spreads in the industry. So exciting time to be talking about Bitcoin with fresh record highs taking place. And without further ado, let's jump right into today's presentation. Little housekeeping. First of all, a quick risk disclaimer: trading a margin, whether it's Forex or Bitcoin, carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. Secondly, a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute investment advice. In other words, we're not giving out specific trade recommendations. We will be covering some educational material on strategies, but we're not giving specific trade recs. Let's talk about what we're going to cover today. It's a complicated subject. There's a lot of misunderstanding around it. We're going to talk about what Bitcoin actually is. We'll cover its dramatic rise in value. You're going to be amazed when you see the yearly chart for Bitcoin this year later on this presentation. We're going to talk about Bitcoin versus fiat currency and go into what fiat currency is and why Bitcoin provides some very appealing advantages over regular fiat currency. And we're going to talk about Bitcoin CFDs, which are what allow you to trade Bitcoin with a broker, contract for differences. And then finally, we're going to touch on a few different strategies for trading Bitcoin. We're going to talk about news a little bit and also technical trading strategies. So let's jump right in and talk about what is Bitcoin. Bitcoin is a cryptocurrency, and it was created in 2009 by a mysterious software developer the alias Satoshi Nakamoto. The initial idea was to produce a decentralized currency, that is a currency that is not overseen by any central bank, can't be diluted with money printing and quantitative easing. So a decentralized digital currency, transferable electronically with minimal transaction fees. So again, Bitcoin is not tied to any one country, central bank, or external authority. I just missed one, go back there quickly. Bitcoins are stored in a digital wallet, which can exist in the cloud or in a personal computer. So that's where you keep them. There's no physical Bitcoins. Where do they come from? Bitcoins are created through a process called mining, where new Bitcoins are found by powerful computers solving complex algorithms or mathematical problems. There's a finite number of Bitcoins. There's only 21 million. So there will only ever be 21 million Bitcoins. Currently there's over 16 million Bitcoins in circulation, so there's still several million that have yet to be mined. Now let's talk for a minute about Bitcoin versus fiat money. First of all, what is fiat money? Fiat money is a currency that a government has declared to be legal tender and isn't tied or backed by a physical commodity such as gold. So the euro, for example, would be an example of a fiat currency. So Bitcoin has the advantage over fiat money in that it can be sent directly from one user to another without any banks or credit cards as an intermediary, without the middlemen taking a cut and making it more expensive to send money and more complicated. And finally, possibly most importantly, unlike fiat money, Bitcoin cannot be printed by central banks, so its value can't be diluted by any external authority. So what you've seen over the past decade is a lot of money printing from the Federal Reserve and the ECB, diluting the value of both the US dollar and the euro. And so the value of Bitcoin, in a sense, is protected because it's not possible for anyone to dilute this currency in that way, which in turn causes inflation and lowers the value of your money as an asset. So now let's take a look at the sharp rise in value we've seen in Bitcoin. It's been a spectacular year for Bitcoin. Here we're looking at the daily chart, which goes back to about April, and we can see that it's trading just over $1,000 at that time. So it's actually increased in value this year from under 1,000 to over $8,000 just in the space of the year, and the year's not even up yet. This type of move is sometimes described as parabolic in the financial market. So what you see is a move that begins sloping up, and as the up move matures, the sharpness of the up move actually increases. So we're looking at a parabolic move in Bitcoin in 2017. Now let's talk a little bit about trading Bitcoin and how you can trade Bitcoin. You can trade Bitcoin in a brokerage account at a broker like OctaFX, and this allows you to speculate on the price movements of Bitcoin, whether you think the price is going up or down. So you might be bearish on Bitcoin and just think it's a bubble and it's going to go back to zero, and you could profit from that idea if you're right by short selling Bitcoin. Let's talk about the mechanism that the brokerage firms use for this. This is done using a Bitcoin CFD, which stands for contract for difference. A CFD is a financial derivative product that allows traders to invest in an asset without actually owning the underlying asset. So in that sense, the Bitcoin CFD is derived from Bitcoin itself, so it's a financial derivative product that allows you to trade the asset without actually owning the underlying. Another feature of CFDs is that they enable you to trade on margin. In other words, you're effectively able to trade a greater amount than you would be able to trade just on your initial deposit by effectively borrowing money from the broker. So, for example, the margin available for Bitcoin at OctaFX is 1 to 5, which means that with a $1,000 deposit, you would effectively be able to trade $5,000 worth of Bitcoin. So you're able to use leverage in that sense, which can work both for you and against you, of course. A little bit about more the specifics of trading Bitcoin. It's most often quoted against the US dollar using the symbol BTCUSD. So that probably looks familiar to you Forex traders who have familiar with symbol Euro USD, for example, Euro USD. So if you buy BTC USD, you're simultaneously buying Bitcoin and selling the US dollar. So this is analogous to Euro USD in the Forex market. You buy Euro USD and you're simultaneously buying Euro and selling dollars. Another thing to consider, getting into the specifics of the contract, the tick value, the smallest price increment when you're trading Bitcoin is $10 per lot. Let's talk for a minute about Bitcoin and news. Bitcoin's price can be driven dramatically by news stories, and we've seen this in the past couple of months. For example, in September, there was news came out that China was cracking down on ICOs, initial coin offerings. There was initial coin offerings springing up like crazy, and the Chinese government moved in to stop this, and that had a major downward pressure on Bitcoin, so a major sell-off. Not too much later, in late October, there's a big story that the CME, the Chicago Mercantile Exchange, or CME Group, is planning to launch Bitcoin futures, which may become available as soon as December. So that was huge news for Bitcoin, and gave it some legitimacy in the financial world. CME Group is the largest commodities exchange in the world. They actually control several different exchanges. They have the Chicago Mercantile Exchange, Chicago Board of Trade, among others. So that was a major boost, gave Bitcoin a lot of credibility that CME was getting involved and planning to launch Bitcoin futures. So in terms of trading and trading strategy, a very astute person following the news in Bitcoin could trade it just purely off fundamentals, and there's a lot of interesting sources for news about Bitcoin on the internet. But now we're going to talk about technical trading strategies for trading Bitcoin. Cover 3 different strategies today. First of all, we're going to look at a basic moving average crossover strategy. We're also going to look at an indicator called on-balance volume, which measures volume coming in and out of an instrument. And we're also going to look at a correlation trading strategy looking at Bitcoin and Ethereum, which is another popular cryptocurrency. So first of all, let's talk about the moving average strategy. The moving average strategy is particularly interesting because it works well. This strategy works well in trending markets, and Bitcoin has been trending very nicely in 2017, as we'll see when we pull up the charts. We're going to look at kind of a classic moving average strategy. It's a moving average crossover strategy that uses the 5 and 10 period EMAs, that's the exponential moving strategy, and looks for the crossover as the entry, with the 5 crossing the 10 upwards for a buy signal and crossing downwards for a sell. We can also use a filter with this, so we pull up the 200 period simple moving average and only take buy trades when price is above it, and only take sell trades when price is below the 200 period SMA. So again, using the 200 period simple moving average as a filter, and only take buy trades, that is when the 5 crosses above the 10 period when price is above the 200, and conversely only take sell signals when the 5 period crosses below the 10 period and price is under the 200 period SMA. So really simple system, and it'll become easier to understand when I pull up the chart in a minute. And we'll see how nicely Bitcoin has been trending on certain time frames. Next, we're going to look at on-balance volume. You hear about this one quite a lot when people are trading Bitcoin. It's a popular indicator and measures positive and negative volume flow. It's an old indicator, and it's based on the concept that volume precedes price. So in other words, if you see a major spike in volume, you may see a reaction, a corresponding reaction in price. It's a couple of several ways to trade this. The 2 main ones are to look for divergences between on-balance volume and price for a possible price reversal, or to look for on-balance volume to be trading in line with price, and that in this case it would confirm the trend, give you another reason to stay in the trend, whether it's up or down. Last strategy we're going to look at is correlation trading with Bitcoin and Ethereum. The 2 cryptocurrencies are very highly correlated. Bitcoin is the larger cryptocurrency, so we would expect this usually to be the leading indicator, but if news comes out about Ethereum, something else happens, it might be vice versa. Ethereum might be a leading indicator for Bitcoin. I'm not a huge fan of short-term day trading strategies, but correlation trading is one that I think is interesting on a shorter time frame, even going as low as, say, the 15-minute chart. And with that, let's jump over to the charts and talk about these strategies. So here we can see our moving average strategy set on the chart. We have the 5 and 10 period EMAs. We got the 200 period simple moving average here, and we're looking for crossovers to get into the market. So for example, here we had a bullish crossover the 5 period crossing above the 10 period, and we had a nice fluid up move here. Price was trading above. Our filter, remember, is we want to see price trading above the 200 period simple moving average for a buy signal, so that's what we got. So we wouldn't have taken the sell signal because we're trading above the 200. We'd only take the sell signal when price is below the 200. Here we had another bullish crossover, the 5 period crossing above the 10 period, and again a nice fluid up move. So here we're looking at the 4-hour chart. I looked at it several different time frames, and it seemed that the market was trending really nicely on the 4-hour chart. So that was a time frame that I wanted to focus on for this trend following moving average strategy. Strategies I'm talking about today, I think, are really most instructive as sort of a basis, a starting point for developing a more well-developed strategy. You could add additional filters on here. Another classic filter to add on would be to say pull up an oscillator and look for further confirmation from the oscillator. An instance of how you might do that would be to add a rule such as, in order to go long, you want to see the stochastics under 20 and curving upwards for a buy signal. Or conversely, if you're looking for a sell signal, you want to see stochastics above 80 and curving downwards. So in this case, we got something pretty close to confirmation. It was stochastics were curving upwards from about the 20 level. So that's a bullish indicator that would have added additional credence to this this buy signal here. So there's our moving average strategy, and again, moving average strategies are best in trending markets. They're not great in sideways markets because you tend to get just chopped in and out of the market. You get into one trade and then the market turns another way and you get forced out of it. Here we're seeing these nice fluid moves up, so interesting strategy to look at for trading Bitcoin on the 4-hour chart. Next up, I wanted to pull up the on-balance volume indicator. As we talked about, this is a popular indicator for trading Bitcoin. So here we're seeing that the OBV is trading pretty much in line with the trend, and gives credence to the continuation of the trend. Suggests that it's not a fake move. The volume's telling you that this is a legitimate up move. If you were seeing a divergence, if you saw price going up and OBV going down, that would be an indicator that you might expect a potential trend change in Bitcoin. So in this case, it's pretty much trading in line with what price is doing in Bitcoin. So that's an interesting one to watch also. The last strategy that we talked about was the correlation strategy. Here I used an overlay with Bitcoin and Ethereum. And as we can see, we're looking at the daily chart here. Here I've overlaid Ethereum. It's got a ticker ETHUSD. And we can see that they're very closely aligned and very highly correlated. So with that in mind, we're going to jump over to the last chart here, where we have Bitcoin on the 5-minute and Ethereum on the 5-minute chart here. So if you're a fan of short-term trading, day trading, strategy that you can look at is trading Bitcoin and Ethereum on these short-term time frames and looking for one to lead the other. So if you saw a big move in Bitcoin, you could expect the corresponding move in Ethereum. And using the chart side by side here it's an easy way to see that. And yeah, a good one to practice on your demo account, just to kind of get a feel for how these cryptocurrencies trade. So with that, everyone, I'm going to wrap it up today. I want to thank everyone very much for coming. If you do have any questions, please shoot me an email at webinar@octafx. And I look forward to seeing you again at our next educational session. Thanks for joining us.